Welcome back to the weekly market wrap for the week of March 8th through the 12th. This is Markets for Millennials, and the title of today's video is called Yields, Yields, Yields. And that's because yields, particularly the 10-year Treasury yield, has been the story of not just the week, but for the last several weeks. And so as we transition over to our charts here, our first chart that we're going to look at, we're going to be on the daily chart. We're looking at the 10-year Treasury. And so as we pull back, you can see here when we had the financial crisis in March 2020, we had the huge decline, the huge sell-off, quick rise, and then the Fed stepped in and suppressed yields, brought yields down, and we kind of stayed on that course, kind of relatively flat for a long time. And then maybe back in October, you started to see a bit of a rise. And then when we hit the new year, it's been kind of on a steady up climb. And that's really the story here. You can see here, if I pull back, that where we're at is we've got this support level. It was resistance, popped up, came down, popped back up, tested it, and have resumed off. The last 2 to 3 days have been rather interesting this week because a lot of people thinking that there's no way yields are going to go up anymore. The Fed's going to have to step in. We've had the Fed basically say nothing's wrong. And so we did come back on a retest. And so if I pull back even further on this chart, then you actually can see that if we pull back in 2016, this was a support level for yields. It was support level again in late 2019, a couple of touches, and then in early 2020 in January and February before the crash happened. So we got above that. That's really good, but we've got this resistance line, which is at about 168. That's where I have my resistance line. And if you pull back to a 3-day chart, you can see we've got a couple of touches in that resistance area. And so that's a pretty important line. You've also got this descending prime trend line, which has been ongoing for some time. That's going to be resistance, pretty heavy resistance. You can see that we're coming right up into into the convergence of both resistance lines, and it'll be interesting. You're gonna have to just sit back and wait for maybe a week, maybe 2 weeks. It's possible that we could come up and just get bounced off and then consolidate in here for a while. It's possible we could get bounced off, fall below our support, and then head back down. Although I don't anticipate that happening until the Fed steps in. I don't know. I just don't see it. I don't see it. Right now, the Fed doesn't, is acting like nothing's wrong. So it's also possible that we come up and we break through and retest and then begin resuming off. And then we've got various levels of light resistance above. But I think this is a pretty critical level. I think the next strongest resistance is going to be just at about the 2 level, maybe just a little bit higher than the 2 level. And we'll see what happens. But there is a lot of room. And if we go back now to our charts, particularly we'll go to the Nasdaq. Over that period of time, again, we're looking at the daily chart. The Nasdaq's recent all-time high was on the 16th of February. And so the right around that time, let's see, where are we? Right here on the chart, we had a huge up day, and we've been going near vertical on the 10-year, and the Nasdaq doesn't like that. Growth names don't like that, and so we had a huge decline. We were talking about this last week. Last week we were right down here at the just about 12% pullback. Since then we've recovered. We had a big up day, we had a big down day. And the trajectory has been kind of uncertain, but right now, so we'll pull back, take a look. I have these trend lines that are cloned from our upward trend ever since the March sell-off, but we're actually below. These clone trend lines are still holding right now. You can see we came down last week. We touched this lower trend line. We've bounced up, hit this resistance. It was resistance, bounced back over it. It became support. We came down and tested it over the last 24 hours on the futures. Came up, and we're kind of sitting just below this resistance line. I'm not sure if I should turn this to green yet. We're going into the weekend. It's a pretty pivotal moment because we've got this trend line. We've also got this resistance. It really depends on yields, I think, with the Nasdaq. So we'll have to pay really close attention. In my mind, as long as yields continue to rise or even stay level where they're at, I don't see the Nasdaq as being a good place to get in as of right now. Perhaps right here, back at the beginning of March, was a good opportunity at the end of last week. Maybe that was the right time to get in on a 10% correction, because 10% correction is pretty normal. That might have been the opportunity to get in, but now at this point, we're kind of melting back up. Could this be just a little bounce in a longer drawdown? Possibly. It's possible that we can get rejected here, continue down, retest that support, and then come down. If that happens, that's going to be alarm bells. And I would be looking, if we get rejected here and bounce back down, I would be looking for an entry point right here. That's because if we get down there, from the all-time high, that's going to be a 20% pullback, just going into bear market territory. And I don't know, that could be possible, but the markets aren't crashing. We're not having any problems with liquidity at this point. I think what we're seeing most of is the impact of the yields, particularly on those growth names in the tech sector, coinciding with just a period of time now where people are, it seems like investors are changing over to the value side of the market from the growth side. So on the S&P yesterday, we hit a new all-time high, kind of pulled back, and we're kind of right at the top of this level, right at the 39.40, 39.30 level, right in that range on the S&P 500. So next week it's going to be a big week, not only for the Nasdaq but also for the S&P as kind of a broader an example illustration of the broader market. We've had a really strong bounce from our pullback here. Wasn't even remotely as deep a pullback, even with so much weight in some of those tech names. So it'll be interesting to see if we can clear above this resistance, which has now been touched twice. If we clear above it, then I think we'll be into price discovery. We'll probably be on our way up for even longer. So it doesn't look like the equity markets are interesting, and especially on the Dow. A lot of people looking at the Dow. We're kind of still in a little bit of a ascending. I've got this kind of ascending wedge. I'm not sure what it means. We're kind of breaking out of it. Next week we might fall back down. I think it'll be important to watch this. The Dow's not attractive. It's already taking off. You don't want to chase momentum here. Not the right time. You're going to want to wait for it to see what happens. I mean, it's possible, if I turn off my auto here, it's possible that this could come up really high, could go on a tear. Don't chase the momentum. It's not a trade that's worth taking. The risk is too high. You might be getting in at the wrong time. It's better to just wait and kind of see what happens. I would be looking for a pullback into support and a little bit of consolidation before I would get in. Let's take a look at gold. So gold, in the last video I mentioned what I thought was happening, this enormous, go to the 3-day, this enormous cup and handle pattern. I've added some ascending trend lines from the low. I thought it was interesting. listening to a podcast, listening to Macro Voices last week. There was a guest, I can't remember his name. The guest, though, talked about gold and talked about this level at about 1680, 1685, 1675 in that range being a critical level. And the guest thought that that was the bottom. And I thought that was interesting because if you go back to last week's video, you'll see that 1675 was about where I always had this green box, this green buy zone. So the way that this buy zone works was that gold could consolidate to any point in here. Just barely the top. You can kind of see we basically touched the top back on the 8th. That was on Monday. That was kind of the low so far. Gold is still not out of the woods yet. Okay, that's important to understand. Just because we've had a bit of a bounce the last few days this week doesn't mean that gold's out of the woods. It's still, at least since the end of August or the beginning of August, it's still in a downtrend overall. Yields are rising. That's not good for gold. And technically, the technical pattern, there's a lot of damage here that needs to be fixed. We need to get up above a couple of these important resistance lines. I think the big one that will prove that we're on our way out of this towards the resumption off the handle, as I've predicted. We will have to show a breakout across 1061, somewhere in that neighborhood. But there's a lot of downside pressure that is coming, not just in the technicals, but with yields. So keep an eye out on that. I think that you should be accumulating here. It's hard to tell. I think my prediction was that that this consolidation downward is going to last at least into the beginning of the summer, maybe longer. It's possible, though, that this was our low and we could consolidate around this level for a little bit and then take off, or we could just start going straight off with the passage of the American Rescue Plan and the $1,400 checks and the unemployment boost. It's possible that that could be the next bit of news that shoots gold out of this consolidation pattern, but it's not certain yet. But I think this is a good place to accumulate. Let's take a quick look at Bitcoin. Bitcoin, I've adjusted my chart a little bit here. We're on the daily chart. I just want to say, if I go to the 15-minute chart, take a look at this chart. If you, the first thing that I think people are doing wrong in their Bitcoin endeavors is they're trying to swing trade it or day trade it, and there is so much volatility. I mean, like, if even just this range that we're looking at, maybe right here between this resistance at 58,388 and the support that I have here around 54,833. I mean, think about that. That's $3,500 of range that is just chopping through here. It's super volatile. It's suicide to try to trade. You should never be looking at Bitcoin on a 15-minute time chart. Maybe a 2-hour or a 4-hour would help you to see when it's making touches to support and resistance. But you need to open up your time preference. Obviously, look, Bitcoin, since the halving, is on its uptrend. But then if you go back to, there's a lot of FUD out there. There's a lot of people talking about how Bitcoin can't last this way. But let's just, look. If we go to about the same place after the halving as we are now, what you see here is this is about what the chart looks like, right? And it seems like, especially as you get over on the right side of the screen here, it's like, wow, it's parabolic. It's unsustainable. It's gonna collapse. It's gonna crash. But then you zoom out, and the actual all-time high makes it look like nothing. So we've got a lot to go, and I think I've said this before. I think I said it last week. My target at the earliest is end of July. The prime target area is mid-September. and then my late target area is about November, mid-November-ish. I think the all-time high is going to happen, or the peak, I should say, of this bull cycle is going to happen somewhere in that range. Let me show you what I did here with Bitcoin. I have a couple of buy and sell boxes. I'm going to have to revisit this red box and move it over to adjust. But I basically put these buy and sell boxes because I always want to be aware of my downside risk. Bitcoin at any point during the cycle can do 30 to 40% pullbacks. It happened, 6 times in the last cycle. So you always got to be prepared for that. So a 30 to 40% pullback from right around our all-time high takes us to between about 36,500 and 4,600, and so those consolidations or those zones those dips can last for 30 to 60 days. So I use this as kind of a guide to assess the pullback. So if we get a pullback into this range, then I'm going to be accumulating more, adding to my position. If we get into the red sell box and this thing adjusts as time goes by, as we continue upward, once we get into this box, then you got to be prepared for the next pullback. So I'll be adjusting that, and you'll end up seeing that the next time we have a video. I didn't look at silver. I personally don't see silver as being interesting. Silver has been chopping sideways for a long time. Go back to my daily time frame. Ever since our run up from March, hit a peak around the same time as gold, and it's sideways. You could swing trade this perhaps, but it's too risky. There's too much area between here. Maybe if we've been tightening up the consolidation region. So silver is always going to outperform gold in a commodities bull market. So that's a good thing, but you could see I've got to change my resistance and my support here. But point being, I don't think silver is really attractive right now either. I don't know. I'll have to just take a look more. Maybe right here was a good entry if you're swing trading it. But it looks like it could come down at any point. I'm just not interested. I'm more interested in Bitcoin. So anyway, that's the weekly market wrap. Those are kind of the big deals going on right now that I'm following. Again, Bitcoin's where it's at. Pay attention to yields. The Dow and the S&P are not yet attractive. You'll want to wait for a pullback and consolidation there. And in my opinion, the Nasdaq is too risky. So thank you for tuning in. Go ahead and like and share this video if you thought it was helpful and if it provided you some insight into the markets. Thanks for watching.